Hello, welcome to today's price action review. Okay, I'll be taking you through what I traded today, and I'll also explain what I saw in price that made me open a position and what I would have done better. So you can see this box here, and you see the price action all over this place here. So to me, that is a consolidation. Okay, I needed to see which area that price was going to break out of. It was either going to be this high here, or this low. You can see I already called out a level here that I was interested in. I called it the buy side liquidity. I just say simply buy side, and then you can see an area I was also interested in looking from the, I guess, 4 hour time frame, and I call it sell side. And then this is Monday's low. Yesterday being Monday, it's candle slow, and this is today's 12 a.m. opening price. Okay. All right, this is the daily range that I resorted to use, and you can see this area here from this candle's high to the open of this particular candle. There's a massive sell buy side imbalance, right? Sell side inefficiency, and I was expecting what I was expecting in price was that the sell side would be delivered. So at the time, I had to call out this level here. You can see the 1:30 to 2 p.m. And within that 1:30 to 2 p.m., the significant high at the time was this area here, and the significant low was this area here. So I had to work with that. I needed to see which area price was going to break out of first. And then you can see what price did. It was just, going back and forth, and we can see this massive bullish candle, but then the next candle there, a down close candle, and price was just doing its thing, headed towards the 250. Towards the 250. Yeah, it was more like it was going up, but then it said we can now see lower prices in the market. So when I was watching this particular candle here, I was like, okay, let's see what price is going to do. And then you can see the next candle that formed is a down close candle, rejecting the midpoint of this consolidation here. And then the next candle did the same thing, failed to take this high, right? And then you can see it's rejected both Monday's low and rejected today's 12 a.m. open. So showing that it really wants to go for lower prices. So I was just watching. I didn't want to engage price here, although this was like a very good reason for me to engage price. Okay, so typically what I would do is that if I was not like working with time per se, I would wait once I've seen that there's this candle. That's why I have this level here, because I was watching to see how the price that was going to come later, how it's going to react, where it's going to close. So I like to see price closing below this bearish order block, because now once this happened, this became a bearish order block. So I was interested in seeing how price would close below that level. And so once it did, yeah, you can see immediately the next candle dropped into the 0.5%. That's the equilibrium of this daily range that we are working with. You can see where I got it from, this high here and this low. Okay, and then I was also looking at this low to be a drawn liquidity, but I was not necessarily going to expect price would get to this level, but definitely I knew that it's going to react to the bodies of this candle, especially importantly feeling, the sell side imbalance and buy side inefficiency. Okay, so once I was watching the next candle form, and then you can see that rejection, I was like, okay, and I think I need to stay calm now because price has rejected the 0.5% level. So I'm like, was it that price, traded down to reach into? At the time, I've not gotten my bias yet, but once this particular thing formed, I was already looking at, some bearishness as lower prices in the market, but I needed more confirmation. So once price did this thing, and then the next candle closed almost closer to the low of this rejection candle. I call it a rejection candle because it left a rejection wick, a wick that looks like it's rejecting that price level. So I'll just call it a rejection candle in case you keep hearing me say rejection candle, rejection wick or stuff. So but you can see that this down close candle almost closed at the low of this candle. That's at the high of this fair value gap that we are using. Okay, this fair value gap is gotten from the 5 minute time frame. That's why it's in this maroon color. Just in case it's you see it in my other videos, just know where it's from. Okay, so yeah, and you can see this level here. Okay, that's what another block. Can you see this was a past order block? Can you see that? Can you see? Can you see this area? And then price, move past it and left us what a fair value gap. Okay, so this was, to me, I wanted to sell. Now that I have my bias as bearish, I needed to sell within this area, because that would be me selling at a discount, not necessarily deep, selling at premium, pardon me, not necessarily deep premium, but a very good place, to sell. All right, so yeah, so I waited and price did this thing drop lower, and then you can see this particular candle here, right? And then so once price dropped 1 2, it was almost, you can see this is the 345 candle. So and 350 is when I'm expecting, the algorithm thing to kick in. So I already opened my position at what? I already opened my position here around the. Okay, so I think I should just go forth and show you my execution so I don't miss a thing. So take notes. There's what? There was an expansion. What now? A consolidation, and then you can see the expansion as well. Okay. Having said that, let's go to execution. Okay, so you see this is from today. So what happened here was, you can see where I had so I opened my a sell, a limit order, not a direct market order, a limit order. So I opened the position there, and then once price traded back up, so the candle was already moving, lower, but then I already had my stop, my limit order there. So once price retraced to that point, it got me filled in, and you can notice where I had my stop loss. Okay, I had my stop loss above the high of this particular candle. Okay, so ideally, you see this. All right, perfect. So ideally, I was supposed to have my high, my stop loss at least above this up close candles now, above the body, or importantly, very importantly, at the what? At the high of that candle. That's like the safe place to have it, not within the body, not within, because most time price will trade into the body of that up close candle. Let's say your narrative is bearish, like I am now, right? But then because price has already traded this particular down close candle now, after this one, the next candle, price has already, traded past it. So I wasn't really expecting that we're going to see a run in price above that area. So that's why I was comfortable having my opening here. And knowing how macro does this thing, most times it will not necessarily hang around this PDRA here, that's this fair value gap. It will just drop, quickly. So that was what I had in mind at the time. That's why I was comfortable having my entry lower at this week. Okay, thinking that, oh, this place is a perfect place to have my stop loss. My execution, I actually opened it in the 1 minute time frame though, but this is the 5 minute time frame. Okay, this is the 5 minute time frame. Okay, you can see when I took the screenshots was around 3. This is my local time, but normally I use the New York local time, so it was around 3:48 at the time. Okay, that's when I got filled, I believe so. So yeah, so I had my stop loss there. Yeah, but ideally I shouldn't have had it within the body. Even if price has already traded, past that candle, it can always return back. So I was in, and then yeah, I got stopped out. I didn't take a screenshot at the time because everything was happening very fast. I needed to, pause and observe what was going on. So you can see that candle that I got filled in. It actually went lower. Can you see? It actually went lower. But the crazy thing was that the next candle, this is the 3:50 p.m. candle, opened and traded all the way, all the way, all the way past. I remember that I had my stop loss there. Can you see? It went past this particular candle's high where I had my stop loss, traded into what the the close of this up close candle, but failed to reach this high. Okay, so it failed to reach this high. And also based on where I made my entry here, if I had my stop loss higher, that would be me risking so much. And that I was not comfortable with that. That's why I just left it there. Okay. But now, based on what I've seen here, if I'm making my entry, if I've made my entry, the best thing to do is to have my stop loss at the high of the candle that's already formed. Okay, because you can see this particular one was still in formation, so it was not ideal to have my stop loss above that same candle. Where that's based on what I'm looking now on the 5 minute time frame. This is subject to change, but I'm just saying what I'm saying now with the information I have currently here. I think what I would have done, ideally was to just have my stop loss above the high of the candle that was already formed here on the 5 minute time frame. I'm going to try that next time and see if it works. In addition to other things that I look to in price, okay? So not just based off of what I'm just looking at right here currently. Okay, so can see that was what took me out of the trade. All right, it took me out of the trade. Yeah, and what I did was I had to hold on. Like, okay, let's see what is going to happen next. So I waited. I didn't want to engage immediately because at this point I was not sure if price was good, but I needed to see where it closed. And when it closed lower, like below this fair value gap that I was working with, like perfect, that's it. So I needed to now get an opportunity to make another entry, and that was exactly what I did. So I had my stop loss. Sorry, I opened another position. You can see still here. I didn't want to risk anything. I had to just open it there. So when I opened it there, my not my stop loss, pardon me, I guess what I said, my limit order again, I used limit order again. I didn't sell at market order. Okay, I used a limit order. I opened it there, and then you can see I got filled in. So when price already engaged this this low of this candle, that's when I moved my, you can see I already moved my stop loss. Okay, I moved it to just beneath my entry, so that even if price should reverse at the time, at least it will, there'll be something in there for me. Okay, all right. So yeah, that's what this screenshot is about. That was my second entry. You can see that price did exactly what I intended for it to do. Can you see where I had my TP? Then price, got to the area where I had my TP, and even went below, engaging with the bodies of all of the candles there. But now I'm going to show you that I did not, stay in for the full run. I didn't stay for the full run. I got stopped out because I moved my stop loss. So you can see the first execution there, I was caught short of about 27 point something pips. Okay, that was the initial loss, and then this was the second trade that I took, and then the profit that I made. You can see the lot size that I'm using, 0.02, and yeah, I think I was able to secure in 336 points something pips. I'll just go straight to, okay, so you can see here number of trades too. You can see the loss. The first one was a loss, sell limit, time of trade. I opened up that position around 3:47 p.m. all the way to 3:50 p.m. and then pip that was lost was what, 27.68 pips, and the losses that was used and the loss that I inquired, and then you can see the initial plan. What was my initial plan? I was risking what 27.68 pips for 102.3 pips. That's almost what 1 to 4 risks to reward. So what was the incident that happened? Got stopped out. Stop loss was not in a safe price level, yeah. Just like what I explained then. And then you can see that my opening balance and what my closing balance was. And then the second trade was what? A profit. What kind of order was it? It was a sell limit. Time of trade, it was 3:55 p.m. and then I exited because I moved my stop loss to a place that was not safe. So it was supposed to typically be a 3:50 to 4 p.m. macro. So ideally, I would have just waited for the 5 minutes candle to close before, taking any action. But then I didn't do that. So what pips that was gained was the 6.56 pips. And then this is the lot size again. You notice how I did not, even in my second trade, I did not increase my lot size because I just incurred a debt. So I had to be very cautious of that. Even if I was very, very, sure of where price was going with my bias. But then what is more important to me is securing my capital over the profit I'm going to make. Over time, I'll be able to scale up, but now I have to secure my equity as well. So you can see the profit that was made there. So I was able to cover up for the loss that was made initially with some profit. And then you can see what the initial plan was on the second trade was I was risking 25.35 pips for what? 101. That's pips. That's 1:4 risk to reward. So what was the incident? Move my stop loss on the 1 minute time frame. Once it was 3:59, stop loss was not in a safe price level again. A little retracement of price took me out and immediately went for my TP. Okay, so at 4 p.m. it hit my TP. I was not happy about it, obviously, but I stayed calm, which is very important. Not trying to force yourself in to like catch the remaining moves, no. But I stayed calm and watch price do its thing. So you can see, initial opening balance and then the closing balance. And you see the dates there, Tuesday, November 18, 2025. Okay, so that's typically it. And yeah, let's see what I would have done differently. That's why I named it possibility. So let's say my entry A, this was my initial entry. What I would have done differently, not knowing what price has done. You can see this area here. Can you see? Can you see this area here, right? So remember when I showed you on my trading view what I was looking at, to me this was a massive consolidation that I wanted price to break out of. So what I could have easily done was once price already closed lower, like that's below this area, and then the next candle has done its thing and formed a fair value gap, right? So a combination of a fair value gap, typically on a 5 minute time frame and an order block, is an ideal point of entry. Okay, an ideal point of entry. Then where would I have my stop loss? Have my stop loss, above the high of the candle close to the order block, or any of this high here, just like I had it here. You can see this high, lower high, higher high, and lower high. I can just have it at either the higher high or the third lower high there. Okay, so you can see, though this is where it would be. If I was using 0.05, that'd be me risking about $37 to make about 155, which is obviously good business. Okay, so you can see I named it entry 1 and the 3:50 p.m. to 4 p.m. macro, right? So this would have been my typical point of entry here. Once price has already formed this fair value gap to me, and I can see that it has already traded into that's this fair value gap there. Okay, so at the time that was like a real displacement candle at the time when it got to that level, but then rejected. Okay, and so imagine I opened here and had my stop loss just like I've just explained now, and then if I had left it to 4 p.m. exactly before exiting 4 p.m. Once it's 4 p.m., then I'll say, okay, what is price doing on the 1 minute time frame? Are there any signs of reversal? Where should I put my stop loss to? And all that. But I think I jilted too early. Okay. So this is just what I would have done differently. Then go to entry B. Where is the next possible entry if I had missed that first one now? Since I missed that first one, now this is under possibility. Okay, all right. So what the second part would have been was what the 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 fair value gap on this 5-minute time frame. Now what I would have done differently was, okay, now that price has, you know, traded in past this up close candle, I can open a limit order at the body of those candles there. You can see a lot of price action going there that are almost at the same level. A good place to have it here. So while I'm waiting for 350 price action. So I'm waiting for 350 price action. I would wait. So limit order here. Then yeah. So I will now have my stop loss above the this up close candle that I'm working with, that's nearest to price, above the up close candle. Then I'll just allow price to do its thing. And then once it's 4 o'clock, then I would know, because you see, once it was 4, price, you know, traded into that area, even went below. I would have gone out with, this was what I traded, although my own position, I opened it here. Okay, then yeah, had my stop loss. Once price, you know, moved in my direction, I moved it lower. But then what I failed to do was, you know, instead of me to not touch my stop loss, I did touch it. And I wasn't supposed to have done that. Since I'm trading macro, allow it, once it's time, and I'll just hit close. Okay, that's what I would have done differently. You can see this is like entry B, 3:50 p.m. to 4 p.m. macro. Okay. So yeah, that was the possibility. So that's typically all for that. Then over here, you can see what it looks like on my this is my MT5 terminal of my from my prop account. Okay, so you can see here, just like what I explained, I had my entry here. This next candle, you know, took me out at that level. You can see what price is saying there, 11 minus 0.7 loss. Then you can see the next entry there. The next entry was here, exactly at the 0.5% level. That's where the entry was. And then I go stopped out with what? Yeah, I go stopped out here with $14.62. What does it look like? Sorry about that. So you can show that I moved my stop loss to the high of this candle while it was still in formation. Imagine. So what you can see, this is exactly 359, like I explained to you. Look below, exactly like I explained to you. So what I did wrong was that I moved it. The best thing I would have even done was just move it to this particular candle here. I say, okay, let me just have it there. That's what I would have moved my stop loss to while I wait for price to do its thing. Not going to move my stop loss to a candle that was still in formation. I don't know why I have a problem with that. So I have to take note of that. Moving my stop loss to a candle, not to the one that is currently on formation, because that's what I did here. So I shouldn't have done that. The best place to have moved it was here. Okay, was here. This place where I have this double wicks, so I've moved it there. Because price, look at what it did. After taking me out, it still went lower. Then went lower and then traded back into exactly to where my take profit initially was. Oh no, 5 minutes. What's going on now? Sorry about that. Taking this out now. Yeah, so you can see the price did its thing, went lower, got to the place where I initially had my TP, and then retraced, but still returned back to that level. But anyways, that's all. Let's go over to the news. So you can see the news. There was high impact news, unemployment claims around 3:10 a.m. and then yeah, that was the only high impact news for the day. So thank you very much. Let me see. Let's take a look at the analysis again. Can you see? Consolidation, then the break and stuff. So at this point, at 350 here, price was returned, you know, above. Price was, you know, going back for what's it called now? For premium. Wanted to, you know, raise price so that market makers could sell at premium. You can see got almost to the 0.385% level, right? So yeah. Okay, then did its thing. So I'm going to take this out because price even traded past it, this would have been the ideal sell side here, because that was where I had my, you know, take profits and use sell side. All right, thank you very much for watching. That'll be all from me. See you in the next one. Bye.